Calgary real estate market is a wild ride of emotions right now, both for buyers and sellers. And if you're not equipped with the right data, it is very easy to go wrong in this market because right now there's no blanket sentiment that applies to the entire market. And if anyone tells you that, they're completely wrong. There is definitely a lot of negative sentiment going through buyers and sellers. Doesn't matter which community and which property type you're looking to buy or sell. However, the market has never been more diversified and more split as far as the intricacies go into what kind of data you need to look into before trying to make a purchase and sale in this market. And it's no longer just down to looking at the basic overall market stats where we used to compare the number of months of inventory, the amount of sales, and the number of new listings coming on the market. Now there are a lot of other things that matter a lot, such as expired and terminated listings. This is something we never really had to look at before as a causation for what's happening in the market and where the sentiment is for either buyers or sellers. But now it matters a lot because it clearly tells a story of how the sellers are thinking, what they're planning ahead, and where we might potentially end up next spring. Before we get started, I want to thank each and every one of you that actually reached out. I was late by 2 days on my market report this month, and I had so many people reach out asking if you're actually putting one out. And it just means so much to me that there are people that wait every single month to see this data, and it makes a difference in your journey, and that's what this is all about. So just a huge thanks before we start the video. Also, before we get started, I absolutely have to mention I have two guides in the description down below. I have the buyer guide and the community guide. Now the community guide specifically is one that gets huge raving reviews. People love the approach that I've taken to explain every single community, the impact on your lifestyle, and what you're going to experience when you actually move into the community. It has reviews from people who have lived there, price points and everything, and all the amenities available within that community. So you know what to expect, and I always like to take it from that approach because a home is far more than just the structural details of the home, the construction, and the parks nearby. It is the vibe and the feel that you get for your family when you actually move into that neighborhood. And I've tried to put that as much as possible into that guide. And the buyer guide, extremely useful. You'll never find anything as detailed as this anywhere on the market. It's going to go top to bottom, every single part of the process, even the emotional aspects of how you should not make a wrong decision by just getting emotionally invested in one part of the process, and take a completely objective approach to what will be good for you and your family moving forward. And of course, as always, I'm Iyer, your Calgary Realtor. If you're planning a move in the next 6, 9, or 12 months, now is the time to reach out because there's a different game plan for everyone in this market. Like I said, we are in such different times compared to where we were in the last 3 years. And depending on what property type, what community you're looking to get into, things can be dramatically different, and I would time things very, very different for you. There are certain clients I'm telling to wait for almost 9 to 12 months right now, versus some clients, the opportune window is between now and Jan. So it all depends where you're looking to get into, what kind of property you're looking for, and we will set you up with a custom game plan based on your personal goals. Before we get started on the market report and taking a look at the exact data and stats, there is something I want to provide way up front in this video right here, as this is something that's going to be extremely helpful for a majority of you watching this video. So if you're looking to make a purchase anytime in the next 1 year, these are some things that you need to think about. Right now, being in November, we have a lot of good deals showing up, especially in new builds. So new builds is where it's at right now. And I know a couple months back I said to hold out for new builds. And now I'm telling you, now is the opportune time, because a lot of those builders absolutely need to clear a certain amount of inventory by December. They need to show it, and it has to reflect on their books to have made those sales. And I'm telling you this from experience because I did close a couple new builds this month, and the amount of deals that we are seeing from the team, what they're reporting, and the amount of things that builders are doing for buyers, bending over backwards to give them anything they want to be able to close those deals, is absolutely amazing. So not only can you get ahead of the market by capturing that additional drop down in price from the new builds, but here's something else you can think about as a first-time home buyer. So if you purchase a new build between now and December, take advantage of that pricing. And then when Jan comes around, if you manage to put your closing over into Jan, what's going to happen is you'll be able to capture the FHSA additional contribution that you can make and make additional savings on that tax refund from that account. In addition to that, there are two other things that actually matter to this environment right now. So you have the GST rebate, which is potentially looking for being passed next year. And if that comes around, that gives you an additional 5% rebate on that new property that you would buy right now. And that's why new construction is starting to become a very attractive option for first-time home buyers. On top of that, something else you need to consider is if you wait around too long and you're just focused purely on price, the rates are going to get away from you. So something to be aware of is right now the Bank of Canada did a rate cut this month, and then they've also announced that this might be it for a little while. And given where inflation, recession fears, everything is headed, and now having them announced the Canada budget, where do you think they're going to be issuing all that money from? They have to issue new bonds. And as they need to attract more people into the bond market, all that issuance will drive the fixed rates higher. If the fixed rates start going higher towards middle of next year, it'll already be too late. So something to keep in mind long term, generally fixed rates are the first one to go up and then the variable will follow after. So right now, the overall expectation and prediction in the market is that variable rates will start climbing back up by end of 2026 and fixed rates will start climbing up by middle of 2026. So if you want to get ahead of that and lock in the sub 4%, which is when you take a bigger picture into consideration, is actually a really good rate to have. And that will give you that stability while capturing the prices right now, but also making full use of the first time home buyer GST rebate, but then also making the additional contribution on Jan. So these are all just all the pieces of the puzzle that we can perfectly make as a game plan for you and set you up for success going into 2026. So this is just a scenario for very few or particular people out there who are exactly in that situation and can take advantage of all of these all at the same time. So that's one game plan. And if you have you need any more details, you'd like to discuss this further and talk more about the bond rates and what's going to happen and all of that between the T-bills and the GOC, definitely let me know and we can have a chat. So my contact details are in the description. You can also scan this QR code right here and it will directly schedule you in with the buyer consultation call. Just mention in the notes that this is the strategy and the new builds is what you're looking for, so I can bring all that information to the table when we have those calls and set you up for success in 2026. Now, without further ado, let's get right into the market report and take a look at the summary by the Calgary Real Estate Board. So what they've said here essentially is inventory levels eased over the last month thanks to the combined impact of a monthly pullback in new listings. So the listings did drop month over month and a monthly pickup in sales. So sales actually went up for October, and that's not surprising at all. It was almost expected. That's just what happens every October. It's the fall market where people who didn't manage to get into the spring or didn't manage to list in spring usually come into the market. This time, of course, there was a pullback in listings, but an increase in sales. So a lot of people were waiting on the sidelines, managed to pull the trigger this month in October. And I expect some of that carryover to also happen in November since there's a lot of pent-up demand. But a lot of people will end up carrying that demand over to next year instead. With over 6,471 in inventory, which again, I will go into why you shouldn't just focus on this number. It is very deceiving depending on what property type you're looking to get into. And 1,885 sales for October. So the months of supply returned back to 3.5 months. It almost went a little bit over 4 last month. So it dropped dramatically after pushing up to 4 months in September. So year-to-date sales in the city total to 20,082 sales. So that's all the way from Jan. And that's actually down 16% compared to last year. But it's still in line with longer-term trends. So like I'll show you the sales graph later, it is pretty on pace. Of course, we've dropped year over year, but that's because we had crazy amount of sales for the last 2 or 3 years, driven by pullbacks in apartment and row-style homes. So excess supply for apartments and row-style homes is weighing on the prices in those segments, more so than any other property type, influencing the total residential prices. So apartments and townhomes right now are having a very hard time, depending especially on which community you're in and which part of the city you're in. but those are heavily weighing down on what the overall expected sentiment for the market is. However, when we look at individual property types, you will see the story is quite a bit different. Here's one example to take a look at when you think that the inventory is just going up everywhere across the city and there's always going to be more opportunities available to find that perfect home. While you're waiting around for the price, there's a dramatic drop sometimes in the type of property that you're looking for. So for example, say your budget, which I think is a very fair amount, 700,000 for Southeast, and you're looking for a 4-bedroom, 1,500 square feet, very fair to get a 4-bedroom apartment. You can see how all the way from July, the amount of drop that we get month over month. And there was a huge drop after September. So yes, you might find a property that all of a sudden has a massive discount on it. But now the amount of renovations required to fix the home and the changes you need to make also need to be considered. So you need to assess how you get that 9 out of 10, 10 out of 10 home right now, which wasn't really possible in the past 3 years unless you ended up in bidding wars because everyone else also wanted those homes. And so right now is an opportune time to get those properties, especially if you have a growing family. Each of your kid needs an additional bedroom and you need a finished basement as a player, you need a large yard, you want to be on a cul-de-sac. All of those properties, those are the ones where the inventory is significantly dropping. If you're looking for a generic property, if your requirement and criteria are not as complicated, if you're looking for a generic 3-bedroom, 1,500 square feet, say about 3,000 square foot lot, those are ample and plenty, and yes, you can wait around and wait for a good deal. However, if you are looking for something very specific, you need to be next to a particular school, then yes, those properties are dropping because that's also what everybody else is going for right now. Something else to consider in this market right now, which we usually never see, is the amount of expireds. So this has already dropped a little bit. We actually crossed over 400 a couple of weeks ago, and I've been monitoring this since. So what is really interesting is because when you look at the amount of new listings that are coming on the market for the past 7 days, this is almost half, and it was more than half a couple of weeks ago. So the amount of people that either their contracts expired or ended up terminating their listings is taking a huge amount of properties off the market versus the amount of properties that are entering the market. And why is this happening? This is setting a floor for what sellers are willing to accept. So when I talk to sellers, either because they're getting too many lowball offers, they have a certain set value, and in most cases that's actually pretty fair amount because they've already done a bunch of price drops. And so they've reached a point where if they feel it's a fair market value for their property given where it is right now, they'd rather terminate their listing and come back next spring because they know there will be more demand. And generally, there are 35% more buyers in springtime, especially for detached properties is what I'm talking about. So a lot of those properties will end up coming back on the market at slightly higher prices because that's the peak demand time and they know they can get a price that they wish. So that does set a floor and something to be aware of in terms of how low these prices can go, because a lot of these people are sitting on significant equity that they've built over the last 3 years especially, and they don't necessarily have to sell. There is a certain type of buyer that are starting to get trapped in their property and almost have to sell at negative equity, and we will call that out later in this video. Taking a look at the overall benchmark pricing, as you can see, the total residential benchmark pricing right now is at 568,000. Last year, our peak was 608, and this is just accounting for all property types. Detached is at 767,800. Detached is at 744,400. Last year, our peak was 767. So you can see we've dropped probably only 20,000 citywide for detached properties. And semi-detached is at 683,100, and that's actually down from 687, but overall we're actually up 1% year over year, whereas detached is down 1.3% year over year. And here you can see the monthly drops and rise just to give you an idea where the trajectory is headed. As far as townhomes go, right now we are at 431,200. So that has dropped significantly from last year, and that's where all that negative sentiment also is coming from the market. So that dropped almost $34,000 year over year. And apartments at 318,000, again a significant drop from last year's peak of 346,000. So year over year we dropped 6.9%, and townhomes dropped 5.6%. Now for sellers, taking a look at the year over year growth comparison, of course this is generalization for an entire quadrant. So do take this with a grain of salt, because there are certain communities right now that have seen significant gains over the last 1 year. There are communities that have 12% gains, even 14% gains year over year. So for sure, take this with a grain of salt, because it just generalized every single quadrant. So roughly, if you're in detached, you can check out, depending on the different parts of the different quadrants in the city, where you would place yourself and what those expected losses are. But of course, as you can see, row and apartments are the biggest losers right now, and those are the ones that are heavily weighing down the total residential. So when you think the entire market is dropping and crashing, be very careful if what you're actually going after is a detached property or a duplex. In certain areas, duplexes are actually doing significantly well. I have actually gone up year over year, supporting that growth of 1% across the entire city. So be careful to apply the overall market sentiment and expect prices to go down next year, because you might be surprised if come spring, the community that you're looking at, the price actually went up. Now taking a look at the overall sales for this month, we had 1,885 sales, which is actually pretty healthy for October. Last month we had 1,720, so obviously it's gone up month over month. And that's where if you take a look at all the Octobers all the way back since 2011, you can see this was where we went up to a peak and then crashed. So this is of course a high point, and this is not what we are trying to reach right now. A moderate sales would be somewhere here, which would be like around this point is what's healthy, because again, last 2 years excessive sales, and then we had the 2021. So you want to essentially be somewhere, I would say, in this range, which is what we are doing right now, and we have pretty good sales. The question is, where are those sales happening? So now you can see here new listings. The amount of new listings that we have in the market is 3,233 for October, and the month before that was 3,700. So that's quite a bit of a drop month over month. So like I said, we do have a lot of listings. This is of course only new listings. So apart from listings being terminated, but we do have listings lesser and lesser coming on the market as we head into the winter. So that of course has an impact on inventory. The final inventory is 6,471 for October. The month before was 6,916. So that's definitely dropped month over month. Year over year, we're still up 30%, but a lot of that is coming from apartments and townhomes instead of detached and duplex. So as you can see here, your total inventory. So our inventory has gone up all the way up to this point. A lot of it is, of course, in city center too. And then we've seen a significant growth in Southeast year over year. We've seen quite a bit of growth in South too, but certain other quadrants are maintaining pretty similar levels. And when we think about longer term inventory, so considering that this is where the inventory was extremely low and led to extremely high pricing, that people got trapped in their properties for another 10 years. And that's specifically, it took apartments 10 years to actually recover from those prices. So those are definitely inventory levels you do not want to see. At the same time, 2018 was peak inventory levels, so those are extremely unhealthy too. So what you want is a range somewhere in between right here. And so we are at pretty similar levels compared to where our sales are, and we are matching those levels right now. If one of these dramatically shift next year, then yes, you are going to see a very different sentiment in the market. So this has resulted in our months of supply dropping sharply month over month. So we had 4 months of supply, and now we are at 3.43 months of supply this month. Now, this is one of my favorite graphs, and I take a huge amount of effort to put in those bright lines right here. So this is where the months of supply was for that community last month. And something very interesting this month is a huge drop across several property types in different areas. So of course, as you can see, row, you have no problem. You've either managed to maintain similar levels of properties on the market, or you've had significant growth like this on East. And one of the things to take into account is just because this goes up does not mean there's now 10 times more properties on the market. What generally happens is the sales have also probably corrected significantly. So, for example, you actually have lesser properties here than I believe in the northwest or north. And but the north just has more sales to compensate for it, which is why you have relatively lower months of inventory because that inventory is being absorbed. However, all the properties listed in East, nobody really wants them right now, especially for row townhomes. But if you're looking for a detached and duplex property, this is another thing you really need to watch out for because as you can see, months of inventory across everywhere has dropped dramatically. So that is basically making all of these communities right now for the month of November more competitive. And the only part that has gone up is Northeast, which has, of course, is expected. Not a lot of people are buying detached homes in Northeast right now. But of course, and then you can also see duplex homes. You can dramatic drops for duplex, huge demand in the Northwest for duplex. And then also over here, you can see in the North, the amount of inventory dropping. So that's how you want to read this chart and be aware of what the market dynamic shift has been in the place that you're looking for a property. Because if it's gone down, then essentially you're going to face more competition. There's more buyers and there's lesser properties available. Now taking a look at the exact details per property type. This is extremely important depending on which property you're going for, as we want to read into what's exactly happened in each property. So October's sales actually reached 1,000 units. And to give you an idea, in spring, we usually hit 1,300, 1,400 units in terms of sales. So 35% more buyers will be coming in around the springtime. And so this is still 5% lower than last year's levels. 1,593 new listings that came back onto the market, causing the sales to new listings ratio to rise by 64%. And inventories have trended down to 2,913. So we have now just under 3 months of supply, which still makes it a pretty competitive market. Of course, it's nothing in comparison to the 1 month or less than 1 month inventory that we had, a month of supply that we had in the last 2 years. But less than 3 months is still pretty competitive for a lot of properties because what's going to end up happening is everyone's going to go for the same type of property. So there's going to be very few properties that check all those boxes, such as being in cul-de-sac, lake communities, premium school communities, or in the Northwest, stuff like that. And if those are your check boxes, that is the checkbox for a lot of other buyers too. And so that's going to face more competition in this market. But overall, it still remains relatively balanced. If you have your options wide open, then you'd be okay and be facing a more balanced market. And it's still far better than the conditions that we reported between 2015 to 2019. So there are pockets of the market that are experiencing buyer market conditions, which are impacting prices. So that's Northeast, East is generally, that's what that is. Benchmark prices eased to 744,400 in October, 1% lower than last year. However, price adjustments ranged from a year-over-year gain of nearly 2% in the city center. So city center actually went up, and a decline of over 5% in the Northeast district. So that's where I was saying there's going to be buyer conditions, and that's going to result in a drop of price. Now, these are graphs that I track on my backend spreadsheets, not available anywhere else, so exclusive data for this video. And what it'll help you do is keeps track of a daily market sentiment and see where things are, because it's easy to report on a monthly sale and say these are the number of sales we had year over year. But if you're in the market right now on a week-to-week, month-to-month basis, to understand where the market sentiment is trended is really good to see. So something like this, for example, where we hit the highs of those sales in detached last year for the spring market, we actually managed to touch those same highs. It's just we didn't sustain it this spring. So there are still buyers, and they all come in all at the same time, but then they left the market together around this time, and you can see the drop is relatively comparable. It's the same as last year. And as far as the fall market goes, we again hit those same levels that we did last year. It's just I don't think we will sustain given the history of spring. So I expect these sales to drop potentially in half the time. And after that point, we will trend back down similar to this. But then we're also going to see a drop of listings in that same time, as we're already seeing from this last month's report. Now, how does this impact you as a buyer? What are the deals you can get? These are other graphs I track, and this further goes into that market sentiment. So 3 months is a trend, is what I say. And you can see the amount of price drops. So as far as the price drops go, this is the range that's been happening so far across all properties. But this is primarily where the concentration is. And what you can see is that there is not a dramatic shift in terms of up or down when it comes to the price drops. So generally, the amount of corrections required for a property to sell has remained pretty consistent. And so finally, sellers are setting the expectations relatively well, but still need to do a couple corrections to entice the buyers right now. As far as properties then after that selling above or below this price, you can see that it's trended down as we head into December. So you can expect to get better deals in the next 2 months. It is very slight, but it is enough to make a difference to your final purchase amount. As far as staying on market, you can see this is headed up ever so slightly. So detached properties are staying on the market a little bit longer as we head into winter. And then as far as the overall sold price goes, you can see the trend line is just mostly sideways. So even though we're having these price drops, price corrections, it's just a matter of setting expectations. And over the last 3 months, we're just mostly going sideways. So we're not seeing any dramatic corrections as far as the final balance number comes at the end. Now let's take a look at the duplex properties. As you can see here, so sales have improved over last month, with new listings have slowed, causing the sales to new listings to actually rise to 57%, which is again slightly lower than typical levels for this year, but high enough to prevent any significant change in inventory levels compared to last month. So with an October benchmark of 683,100, prices have actually remained 1% higher than last year, and the year-to-date basis over 3% higher than last year. So duplex homes is that perfect balance right now for a lot of buyers who do not want to stretch out completely and go over to detached, but don't feel the need that they need to settle for a townhome anymore, which was the case for the last 3 years because of the amount of competition that was happening. So people are able to settle in with very good communities, get into those duplex homes. And I myself live in a duplex home, and it feels the same as a detached. There are usually very specific reasons that you need to go from a duplex to a detached, but in terms of square footage, the amount of bedrooms, everything is just extremely spacious, and it's a lot to maintain already. So I don't think I'd personally ever go to a detached, but you can see there's a huge appeal for people to go to duplex right now. Taking a look at those internal graphs that I have. So for duplex, as you can see, we didn't quite manage to achieve the same levels in terms of sales per day in springtime. And we had a surprising miracle day somewhere in fall last year, which is very different from usual. So we definitely wouldn't hit those levels. I would have expected at least to come around this point. But it seems like the sales so far is dwindling down, and there's no sign of the fall market impact on duplex sales just yet. However, they're still relatively holding pretty well sideways. They have lesser of a drop down compared to detached, and that's just because overall there's just lesser properties. So they generally have a more stable ride going sideways. Taking a look at those detailed graphs that I have for duplex properties. So as you can see, the price drops were slowly increasing over time for the last 3 months. So there are some better deals to be had for sure, even though we are seeing year-over-year price gains. And as far as them selling below this price, that's trended up a little bit, but then now over the month of October has started trending back down a little bit. So what we got reported for October, you would have gotten all of these sales right here, and that would have resulted in that additional 1% gain year over year. But as after that point, the trend is a little lower. As you can see, we set the peak right here, and then we started going down a little bit. But that's also happened here. So we generally end up maintaining these levels and go sideways, but there is a downward trend for sure that we need to monitor. And what confirms this as something we need to check in is the days on markets. As you can see, the days on market is increasing quite a bit suddenly towards the second half or last week of October, really. So that's going to make some sellers a bit more anxious, and there's going to be some good deals to be had. So these are the two things we're going to monitor, especially if you're looking to buy a semi-detached and you reach out. I'll keep you on top of all these things, and that's how we're going to decide what offers we put. Now taking a look at the row townhomes. So row townhomes, the sales remain well above long-term trends. New listings have actually been on the rise and reached record highs so far this year. As on October, there were actually 1,054 units in inventory, the highest reported for the month, and nearly 32% higher than long-term averages. So you can see this is really where the problem starts when you start getting into those lower price ranges, because this has caused the months of supply to remain around 4 months. So you have a lot of options available in the market now. I do have to still make it clear that even though this property type is seeing significant drops in prices, huge amount of inventory, very little competition, there are going to be certain pockets of the city that are going to still be very, very competitive, because there are just not too many townhomes in that area, or they're in good school districts, or they're in parts of the city that everyone wants to move to. The October benchmark price was 431,200, which is 1% lower than last month and nearly 6% lower than the prices reported last year at this time. Taking a look at the townhomes, so you can see significant difference in terms of the type of sales we've seen. So last year we hit those peaks and we were sustaining it for a significantly longer time. This year we hit that one day, had a huge drop right here in sales, which built up all the inventory. Again, one more day right here, then a huge amount of pessimism all the way heading into the end of the year. And the fall market has had absolutely zero impact in terms of the increase of sales. If anything, I would say it's at least balancing out and starting to head sideways, but that's going to happen for a little bit, as we saw again like last year. So that's just generally what happens, and then you're going to see a huge drop down once we head into December. Taking a look at those detailed graphs, as you can see, a clear trend for the amount of price drops. So you can see the price drops right here, heading into end of October, November. It's just consistently downward graph. So this is where I would start changing what my advice would be. If you're looking for a townhome and apartment, depending on where you're looking, I might actually tell you to wait, because I do expect a clear trend to keep continuing down at least until mid-Jan, potentially Feb, then where we might see a sideways movement, maybe a slight push up or balance out for spring. So there are definitely better deals to be had going ahead. And I've actually advised that to a couple of clients, because the areas that they're looking, just a lot of inventory available. Depending on the amount of property selling above and below this price, you can see this. If you're a seller going sideways, what you should expect. It did dip a little bit towards the end of September, but has started picking back up. And that's probably just because the expectations of what's happening on the price upside is finally meeting what the buyers want. And the town's days on market is also consistently going up all the way to the end of September, and started dropping a little bit towards the end of October. And that impact over the overall sold price obviously continued going down for the last 3 months, and seems like it's starting to head sideways. We'd have to wait one more month to confirm that. But if you are starting to look into this segment or apartments, as you'll see now next, this is where I would tell you to start waiting. And this is why it makes a dramatic difference looking at the very specific data for each property type. Now, the next thing is apartments. So the pullback in new listings relative to sales this month did help prevent further gain in inventory levels. This is interesting because apartments was just on a tear as far as adding so much inventory to the market. So we ended up with 1,891 inventory and 412 sales, which is just abysmal compared to the amount of inventory we have in the market. So the months of supply remained elevated at nearly 5 months. Buyer's market conditions for nearly 6 months, placing downward pressure on prices 6 months. That's extremely high. October, the benchmark price was 318,200, down over 1% compared to last month, and nearly 7% lower than last October. So the largest year-to-date price declines actually occurred in Northeast, no surprise there. Southeast, so very interesting, at almost 4%. So there's a lot of apartment buildings actually available in Southeast. Most people don't know that. So when you just start seeing a lot of inventory come up from those buildings, you are expecting some really good discounts. So now, for example, would be a great time to get into some premium communities in the Southeast. For example, if you wanted a lake living and you wanted to get into Auburn Bay or you wanted to get into Mahogany, now would be your time to take advantage of the overall Southeast market sentiment and try to get into those lake communities where you have that amazing lifestyle for your family, but you can get those at discounted prices right now. However, again, this is a market segment I would be weary of right now because I do expect more corrections going forward. So it all comes down to which communities you're targeting. Do you need that LRT access? Do you want to come down your building and just be able to walk over to an LRT station? Do you want to be next to a really good complex, such as the one in Mahogany? You're right next to Chairman's. So things like that, depending on what you're looking for, there might be an opportunity right now, but otherwise, generally, I would tell you to wait. Of course, we would still set you up with a search. We would set you up with a complete game plan right now so that you're well aware and targeted versus just being diluted across the entire market. We would tell you specific areas that you can look out for really, really good deals right now. Something else to watch out for apartments. Apartments is something I would only tell people to buy if you have a long-term horizon. Don't buy apartments because you need to sell it in 2 years or 3 years. That is the worst decision you can make. If you are buying an apartment because your lifestyle makes sense to have an apartment, you want low maintenance, you know you don't need to expand. You could buy a 2-3 bedroom apartment, still have 2 kids, and buy a building that allows pets, and you don't need anything more than that. Be prepared to be in that apartment for a while. The biggest mistake I see people making is buying an apartment expecting it to potentially sell in 2-3 years. That's almost a proven recipe for disaster. A lot of people that bought apartments way back in 2014 managed to break even in 2024, 10 years later, or till this day still are in negative. So apartment really is something you need to be careful of, and you need to plan well depending on why you're buying it. It has to make sense for you. And the other thing you need to be aware of is the amount of purpose-built rentals that is coming into downtown. So rents are dropping dramatically in downtown. And the other thing that's going to happen is 10,000 rental units are coming on market between this year and next year. So the demand for rentals for apartments is going to drop. And if you can just rent instead of buying to protect yourself and wait and see where the market's going and maybe save up more money and get into a townhome instead or a duplex even, that is probably what I would advise instead of trying and buying an apartment. So of course, it depends on each person's personal situation, and we've gone already into too much detail, but reach out and let's discuss your situation and what your goals are, because this might not be the right fit for you. Now, looking at the sales per day, as you can see, apartments, absolutely abysmal overall. Last year we had crazy amount of sales up in spring. We have come nowhere close to those levels the entire year. You just had pretty much sideways movement, slight uptick here for the fall market. I do expect that to correct pretty quickly because even in general markets, it doesn't sustain. And so that's going to come down pretty fast. And there are, again, good deals to be had. If you know you're going to be in that apartment for a while, you can find you something really nice with a huge patio, all the facilities and amenities you need. And for some people, it makes perfect sense. So definitely reach out and let's make some plans for you. Taking a look at the specific stats, as you can see, the amount of price drops, we had a huge amount of price drops here in September. You can see all these massive spikes right here, and those have significantly dropped getting into end of October. However, there are still, of course, good deals to be had, and I'm still seeing price drops. It's just that they're coming on market at more reasonable prices right now. In terms of the property selling above and below this price, even though they're not doing the price drops, people are still able to bid significantly below and get those properties off the market. So you should be able to put in some really good offers right now to get those properties off the market. As far as average days on market, those properties had to stay significantly longer around this time in September, but that has dropped sharply going into October. So properties are selling faster. So you can clearly tell the story here. People are willing to give you bigger discounts now as sellers. And so as a buyer, you can take advantage of that because they want to get the property off the market even faster. That's really what's happening. And the final impact on overall pricing, you can see here since September, the price has just been dropping as far as the overall sales average goes. So the trend line's headed down. That's what's happening for apartments. Now, as a replacement for the benchmark price that I used to have on an entire map, I got rid of that because that's just total residential and it just averages out everything, doesn't give you a clear picture of what's really happening in the market. So let's take a look at those stats now, specific by property type. So as you can see, for detached, you actually have gains year over year. City center has gone up by 1.74%. Now remember, this is still averaging out for that particular part of the city. So there's going to be detached properties in that area within a specific community that's gone up significantly more. It just averages down based on the losses in some other communities within that part. And the Northwest is the other one that's actually gone up year over year. So a lot of people think the entire market's crashing down and they're waiting for Northwest to also crash, but Northwest has actually gone up. Certain communities such as Citadel, for example, has gone up 2%. Certain other communities have gone up by 5%, 3%, depending on where in Northwest you're looking for. So it is extremely important to look at more granular data, because if you're expecting the entire market to crash, but one community is going the other way, guess what? You're getting left behind. As far as month over month goes, you can see city center actually went up by 0.43%, which is pretty good in this market, and that's the average. And there's overall losses. Of course, Northeast, the biggest loser for detached, is 5.59% as far as the lowest gains. And East also went down by about 5%. No surprises there. Looking at duplex, duplex had three parts go up year over year. So city center went up by 1.75%, Northwest went up by 0.99, and West has actually gone up by 1.56. Again, high demand parts of the city where people absolutely love to go. Northwest West is people are not exactly compromising. That's where people wanted to go even in the last 3 years. It was extremely competitive to get into, and now you can still do it without paying significantly over the list price. So people are taking advantage of that, and that's resulting in the benchmark price still going up. Month over month, city center, of course, went up 0.43%, and North still went up by 0.16%. And then you have significant drops in Northeast and East, same as detached. Looking at the townhomes, so you can see townhomes really had zero parts of the city that went up. And of course, this is generalizing by quadrant. Now, within the quadrant, there might be one community that actually did well. And so reach out and we will find out if that's the case. But Northeast, significant drop, minus 11% compared to last year. That is crazy. And month over month, city center is the only one that trended the other way and went up by 0.74%, which is pretty healthy. Now, looking at apartments, overall, of course, as expected, drops everywhere. And this is what's affecting the sentiment of the market when people say the market's crashing and there's just drops everywhere. This is where all of it's at, because you can see so many of them are at 10% or almost 10%. This is a 9.946. This is an 8.45. So East, Southeast, Northeast, just not doing well at all. And month over month, again, all of them dropping by around 2% average, I would say. So 1.4% here on average, but there's a lot of 2% here. And that would give you an idea of how each part of the city is performing with different property types. And of course, if you'd like a more detailed breakdown, definitely reach out. So looking at the total residential benchmark, this is what people look at when they say the market's dropping. And it definitely is, because it averages all property types. So right here, you can see from 2024, our peak for 2025 was right about here. And then we've pretty much gone down from there. The average price did set higher because we had more $1 million properties actually selling at the start of the year. That trend went away. So the $1 million property sales did drop. And generally what happens is, try and imagine this as a traffic light. So when we see recovery in the market, it is usually the affordable parts of the market are the first ones to crash, which is what apartments and townhomes is happening right now. And what we see when it comes to buyers returning back to the market, it's usually on the more expensive side. So it's the $1 million properties that will see an increase of sales first. Once those become too unaffordable or the price increase just doesn't make sense, that will drop. The sales will drop. And it's not usually right after, but the next in line is the price range right below that. So the next we are expecting is, I would say, 750,000 to $1 million is what we'll see an increase of sales at some point. It could be next spring, could be end of next year, could be at some point. And then once that becomes too expensive, then people move one segment down. And that's how we ended up with last 3 years of apartments and townhomes doing how well they did, just because the upper price ranges became unreachable for a lot of people. They went up way too fast. And so those people end up moving down, down, down till apartments and townhomes also doesn't make sense anymore. And then the whole market just takes a moment to breathe. And then we return back at the $1 million range. So I hope you find that extremely useful. That's how the market works. And so expect the next range to be 750,000 to about $1 million. And then I would say 500 to the 750 is where, or more like 600 to 750 is the next segment to face the upward pressure. And then depending on how much units and stuff we have, and depending on how the economy does, that's of course, that's the backdrop to everything. If the economy goes down the toilet, then all of this will just make no sense. Now, something else I want to put in this video before we close out, extremely valuable based on the analysis that I've been doing over the past 1 month, is to take a look and have perspective on housing affordability. Because of course, housing affordability has an impact on the market corrections. You see that Canada-wide properties are crashing, especially in Toronto and Vancouver, and that's because their housing affordability was at insane levels. So as you can see here, percentage of median income, Vancouver was actually above 100%, and Toronto also reached almost 90% right here towards the end here. So they obviously will see the largest corrections as people back away from the market. And overall Canada, you can see the affordability also dropping down. But when it comes to Calgary, you can see when we went up, we didn't go that crazy. We didn't do this, right? So our down is also not as dramatic. We usually come back down a little bit, and then we will just trend sideways, have a little bit of a correction in certain property types, and then just continue on. And something else that really sheds light on this is understanding how rents directly correlate with the pricing. So right now, as far as you look at the monthly mortgage payment on a medium price condo in Toronto, they went so far above where the rents were that it made no sense after a point for investors, and they back out of the market. And once they start dropping out, pre-sale condos, of course, we've seen what ends up happening. Nobody wants to buy those. And then that results in a huge correction down for those property types. And the rents mostly have just moved sideways, but you can see the trend needs to correct down. The longer term average spread is actually around here, so they're significantly far from that. Now when we look at Calgary, so Calgary actually had their average monthly rent from 2020 till about 2023, they were significantly above what it costed to even buy a condo. It made so much sense for investors to come in and start buying up these condos, expecting huge monthly gains on their property. But now, as you can see, the prices again went up to a point where it didn't make sense and went far past the average monthly rent. So now that needs to correct down a bit. Usually it converges the other way. We see a little bit of a downturn, then it either moves sideways depending on where the market is. Years, of course, 2020. So we had a huge change in deviation. So the economy backdrop also plays a huge role. But this is usually what decides that we need to come back down and correct and make sense. So depending on how much rent you're paying, depending on where the prices are headed, moving that money into paying your own mortgage versus paying someone else's mortgage, it all makes, it's a completely different situation depending on what the property type is and where you are. So definitely reach out, and I would love to go through that with you, plan out what the cost of waiting on the sidelines for the next 1 year is, or does the amount of equity that you built into your property way more than where the drops are for the next 1 year, and instead of paying rent, then you might as well make money on your property, even though your property value went down, but you're actually up compared to paying that rent. So there are a lot of different ways and approaches to look at this. And depending on where you are, we would love to walk you through this and plan something out that would best help achieve your success in 2026. And that's it for this video. Of course, it was longer than usual, and that's because there's just so much information and value depending on what property, what community you're looking to get into. And as you can tell, there's no one story for everyone. Overall, though, yes, the market is taking a breather, especially in certain property types, and you can feel less pressured as a buyer now, wait a bit more, and browse properties and find that 9 out of 10, 10 out of 10 properties, because now is the time between now and I would say Jan is when there's just lesser pressure on the market, and you can jump on that perfect deal and use the market sentiment in your favor, get those perfect deals, and bring the price down. But also, if you're a first-time home buyer, there are some amazing deals to be had as far as new construction goes. And let me know, because I, of course, talk to the sales manager on those offices on a daily basis, and I know exactly where their price movement and sentiment is. And we could negotiate something in, get you a bunch of upgrades into your home. And most people don't know this, but realtors also work for new construction significantly. And we are able to negotiate a lot of things in for you instead of just settling for what the builder is giving you. So definitely reach out, and I would love to have those negotiations for you and take advantage of that home buyer rebate that comes in next year. On top of that, plan around your RSP FHSA. And something that most people also don't know is that if you've just recently gone through a divorce or separated, you actually qualify as a first-time home buyer right away. So I have had a situation recently, is why I mentioned this, where they got divorced and she had to start looking for a property. She didn't know she qualifies as a first-time home buyer, but she does, and then she's got able to take entire benefits of all of this that I discussed right here on this video. So there are a lot of interesting strategies in the market, which is why I tell you to reach out. Doesn't matter if you're planning to buy now or anytime in the next 1 year. Let's set you up with a game plan so that you are set up for success. Let's play the numbers in your favor. Thanks for staying till the end. Of course, remember there's 2 guides in the description, buyer guide and the community guide. Get those on your way out. Those will be extremely helpful on your journey. And if you have any questions, definitely reach out, and I'll see you guys in the next video. Till then, take care.